Get ready, tech enthusiasts. We've got breaking news from Microsoft Sphere that you won't want to miss. First up, a major investment firm is shifting its stake in Microsoft Corporation. What does this mean for MSFT? Then, another massive player, Gestao do Investimentos Ltda, has adjusted its holdings. We're diving deep into these moves. But that's not all. The tech world is buzzing as Elon Musk publicly calls out Microsoft over controversial comments from Blizzard Entertainment developers. And in a massive AI development, OpenAI and Microsoft are reportedly finalizing a huge divestiture agreement that could reshape the future of artificial intelligence. Stick around, because this is Microsoft Sphere. Wall Street watchers are zeroing in on Microsoft Corporation as Adage Capital Partners GP, L.L.C, has strategically trimmed its stake. This significant investment firm adjusted its holdings by 4.4% in the first quarter, selling 309,100 shares. While this might seem like a small shift, Microsoft now represents a substantial 4.7% of Adage Capital's portfolio, making it their second largest position. The sheer value of their remaining stake is astronomical, reportedly over $2.5 billion. But Adage isn't the only one making moves. We're seeing a flurry of activity from other institutional investors and hedge funds, with some increasing their positions and others making new entries. This complex dance of buying and selling from major players provides a fascinating snapshot of market sentiment towards Microsoft, a tech giant with a market cap soaring past $3.7 trillion. The market is clearly watching every move, with analysts maintaining a strong outlook, many issuing outperform ratings and hiking price targets. The recent earnings report showed Microsoft smashing expectations, with revenue up 18.1% year-over-year and a strong EPS beating estimates. Even insiders like CEO Satya Nadella and EVP Takeshi Numoto have made significant stock transactions. Don't go anywhere, because the shifts in the market are far from over. Next up, another heavyweight investor, Gestao do Investimentos Ltda, is adjusting its Microsoft holdings, and we've got the details. Holders of Microsoft Corporation are keeping a close eye on their investments as Gestao do Investimentos Ltda has also recently adjusted its position. This institutional investor trimmed its stake by 5.1% in the first quarter, selling 2,146 shares. While Microsoft now constitutes about 0.5% of Gestao do Investimentos Ltda's overall portfolio, making it their 23rd largest holding, the value is still impressive, sitting at $15 million. This move comes amidst a broader trend of institutional activity. We've seen other major players like Belmont Capital L.L.C and AQR Capital Management L.L.C significantly grow their stakes, while others like Bank Transatlantique S.A. and Advisors Asset Management Inc. also made notable increases. With over 71% of Microsoft stock held by institutions, these adjustments offer critical insights into the market's confidence in the software giant. Analysts are largely bullish, with price targets consistently being raised, and the company's recent earnings report showcased robust revenue growth and beat-all earnings expectations. Even with CEO Satya Nadella and EVP Takeshi Numoto making significant sales, the overall sentiment remains overwhelmingly positive, with a consensus moderate buy rating. But the market isn't the only place making waves. The tech world is facing a major controversy. Get ready, because we're talking about Elon Musk calling out Microsoft over shocking comments from Blizzard Entertainment developers. Tensions are flaring in the tech and gaming world as Elon Musk has directly called out Microsoft over deeply concerning comments made by Blizzard Entertainment developers. Musk publicly tagged Microsoft CEO Satya Nadella on X, demanding answers after multiple Blizzard employees were found posting or amplifying remarks that appeared to celebrate the assassination of conservative activist Charlie Kirk. This is a serious accusation, especially considering Microsoft's recent $69 billion acquisition of Activision Blizzard, which includes Blizzard Entertainment. Microsoft has issued a swift official statement acknowledging the situation, stating they are aware of the views expressed by a small subset of our employees and that comments celebrating violence against anyone are unacceptable and do not align with our values. The company has confirmed they are reviewing each individual situation, underscoring the gravity of the situation and the potential corporate accountability involved. The incident has sent shockwaves through the industry, drawing comparisons to other recent controversies and highlighting the intense scrutiny on employee conduct in the digital age. Blizzard, known for massive franchises like World of Warcraft and Overwatch, now finds its employees and parent company under a harsh spotlight. This controversy is shaking up the corporate landscape, but we're also tracking massive shifts in the future of AI. Stay with us as we break down the game-changing Divestiture agreement between OpenAI and Microsoft. Get ready for a seismic shift in the AI landscape, as OpenAI and Microsoft are reportedly finalizing a significant divestiture agreement that could redefine their partnership and the future of artificial intelligence. Media reports indicate that OpenAI has informed some shareholders about a dramatic reduction in the revenue-sharing percentage it pays to Microsoft. This rate is expected to plummet from nearly 20% this year down to approximately 8% by 2030. This massive change means OpenAI could retain over $50 billion in additional revenue for itself over the next decade, a staggering figure that underscores the evolving dynamics between these tech titans. This isn't just about revenue splits. Discussions are reportedly ongoing about how their partnership will evolve once OpenAI achieves artificial general intelligence, or AGI, AI at human-level intelligence. Under the current contract, Microsoft would lose its exclusive access to OpenAI's technology upon AGI's achievement, and they are actively negotiating to amend or even remove this clause. Furthermore, the cost of server rentals OpenAI leases from Microsoft is also a key point of discussion. The new corporate structure is also being reshaped, with OpenAI's nonprofit organization and Microsoft each expected to receive approximately one-third of the shares, as OpenAI currently allows employees to sell shares at a valuation of $500 billion. This strategic realignment suggests a deepening, albeit restructured, commitment between the two entities. We've covered major market shifts, corporate controversies, and groundbreaking AI developments. Don't go anywhere, because we're about to wrap it all up with a lightning-fast recap and your essential call to action. And that's a wrap on today's Microsoft Sphere update. We saw Adage Capital Partners, GP L.L.C, and BW Gestao do Investimentos Ltda, adjusting their Microsoft stakes, sparking investor interest. Then, Elon Musk publicly challenged Microsoft over controversial remarks from Blizzard Entertainment developers, creating a major industry stir. Finally, OpenAI and Microsoft are reportedly set to drastically reduce revenue sharing, a move that could reshape the AI landscape for years to come. Did you catch all that? Don't miss a single update. Hit that like button if you found this valuable, subscribe to Microsoft Sphere for all your tech news needs, and ring that notification bell so you never miss a beat. Share this with your friends and follow us on all our social channels for more exclusive content. We'll see you next time.